Good evening. I am Abhinav Chauhan, Research Analyst from PRS team. I welcome everyone to this edition of the weekly market wrap-up. Market outlook. The Indian equity market ended overall on a positive note this week, with BSE Sensex and the Nifty rising by 1.7% each, where on year-to-date basis, Nifty, Sensex and mid-caps had risen by 4.3%, 4.4% and 3.5% respectively, while small caps had underperformed and have fallen by 3.6% during the year. But the market rally in this week had broad-based, which is setting up a good outlook for the next year. Market edged higher and closed in green in 4 out of 5 trading sessions in this week. Now as we look at all the sectors, rally was primarily led by banking sector, specifically the PSU banks. This sector rallied on account of higher double-digit credit growth, mainly contributed by retail segment, and improving asset quality. As per the recent report from the RBI, the net non-performing assets ratio came at 1.3% in September 22, which is at their 10 years low. This net NPA ratio was at similar level back in March 2012. Besides bank, FMCG sector have also performed well on account of easing raw material prices and rising rural demand, which have fueled the volume growth of these companies in this particular sector. IT sector is one of the sector which has underperformed during the month and a year because of high inflation pressure and steep rise in interest rates by the Federal Reserve, which has raised the fear of recession in the Western world. But recently, sell-off in tech stocks globally has further exacerbated the issue. Regarding institutional flows, in this year, Indian equities did not find much favor with foreign investors. Despite disinterest from FIIs, domestic investors have helped Indian equities trump the global turmoil. Indian shares have outperformed their peers and are trading close to their all-time high than most other major indices globally. Debt market. In the debt market, there was no significant movement in the 10-year GSEC as it has remained range-bound around 7.3%. Recently, Bank of Japan signaled widening of its target band for interest rates on 10-year government bonds within 50 basis points, wider than the previous 25 points. Along with this, news of COVID rising again led the global sell-off last week, but fall related to this news was recovered by the Indian market. India's current account deficit surged to an all-time high of $36.4 billion in July to September month. The latest deficit figure is double the 18.2 billion posted in April to June month and nearly 4 times of what it was in the second quarter of FY22. This deficit got bigger because of weak global demand and the strong Indian consumption. Thank you. That's all from the weekly market wrap-up. Wishing you a very happy new year.